Hello and welcome to our market alert video for today, which is August 25, 2023. I am Ken Moraif and I'm founder and CEO of Retirement Planners of America. And I'm glad you're with us. I hope you are having a fantastic weekend and that you are staying cool. Want to report to you something strange that happened to me. I escaped from the heat. I went to Colorado. And while I was there, my wife convinced me to go on a hike up to Cathedral Lake. It's considered one of the more demanding hikes, and it's 3.5 miles up to the lake and then 3.5 miles back down. You start at 10,000 feet, you go 2,000 feet, you climb to 12,000. Now, I've been playing tennis competitively for 58 years. I can climb anything. I can climb stairs. I can climb mountains. I can climb. That's not a problem. For me, the problem is going back down. Going downstairs is harder for me than going upstairs. And so as we were climbing this mountain to get to this lake, I was thinking, oh my gosh, have I gone too far? Am I actually going to be able to make it back down again? But I didn't want to give up, wanted to get to the lake. And so did the 3.6 miles, 3.7 miles on the way back down. And it was a challenge. I got to tell you, my knees, my legs were jello bowls. And I thought that, I'm going to pay a heavy price for this. And the next day, you know what happened? No knee pain. In fact, everything gone. It was like it cured me. It was crazy. So now I'm a hiking enthusiast. It's like the cure for all my ailments. So anyway, let's get back to the topic at hand, which is what's going on with this market. I mean, it's down now about 6% from the previous peak. What is it all about? Well, we've branded this the inflation shock, as you know, because we said that inflation would bottom in June around 3%, which it did. We then said that it would start trending back up again, which it has. And we said that the Federal Reserve would not be lowering interest rates later on this year. In fact, they might raise them. And today, Chairman Powell came out, the Federal Reserve Chairman, and said exactly that. We are probably going to raise interest rates or at least keep them high. And so now it appears that the odds of interest rates going up are higher than the odds of interest rates going down, which is what we said would be the case. So it's a good thing. Actually, Chairman Powell should watch this video. Maybe that might help him. Maybe not. Anyway, so what does that all mean? Well, it means that this correction, which we said would come 6 to 10%, and right now it's 6, or 5 to 10, and it's 6. So it's in the range we said. But we also think that it's going to be short-lived because we think it's going to be viewed as a buying opportunity. The Fed is going to eventually get inflation under control. And so by the end of this year, we think the market will be higher than where it is today. Now, of course, we could be wrong. And the Fed may have overdone it. They've raised interest rates faster than they've ever done it before. The percentage gain has never been seen before. And the damage that could have created is slow to find its way through the system. Usually takes about a year before we see everything that's being caused by those higher interest rates. So for all we know, they could be creating a terrible recession. We're starting to see credit card debt go up dramatically. Housing prices, people aren't buying houses. That slowed way down. We're seeing the consumer start to retrench. Consumer confidence is starting to come down. So maybe they overdid it and we're going to have a big bad recession and a big bad bear market with it. We don't think so, but it's possible, certainly. And our view is that you plan for the worst and hope for the best, not the other way around. You don't plan for the best and hope the worst doesn't happen. We don't think that's very prudent. So therefore, we think you should have a strategy, especially if you're over 50, retiring soon. We think you should have a strategy to protect yourself from a potential bear market, which we think is an inevitability between now and the rest of your life. What do you think? Think there'll be another one? So protecting, we think, is important. Our strategy told us to sell in April of last year, as you know, and told us to stay out for the rest of the year. And of course, the market went way down after that. We are still not in bonds. If you're in bonds, you've probably been losing money. We don't think it's a good place, especially given what Chairman Powell said today. Bonds are still not a good place. We don't think they will be until probably the second quarter of next year. So I'd like to offer you a meeting with one of our retirement planners to build for you a retirement cash flow plan, to build in for you the invest and protect strategy to protect your retirement from the next market crash, hopefully, and do everything we can to help you to become a SCWPS. And if you don't know what a SCWPS is the acronym for Second Childhood Without Parental Supervision. So if you're a client of ours and you retire, you are now a SCWPS. And that's our goal, is to have as many people as we possibly can become SCWPS and out there being kids again. And we want to do that for you if we can. So go to our website, it's rpoa.com, and visit with one of our retirement planners. I think you'll find it beneficial. No charge or obligation, and we'll part friends regardless of what happens. So thanks for watching this video. Share it with as many people as you possibly can. We want to help as many people as we can. Okay, so thanks for watching this video, and we will talk soon.